Hello, YouTube. Did we just survive the stock market crash of 2023? We note that QQQ and SPY are right around a very close mathematical number, and there is symmetry coming back into the market. The 70% fib is now right at the same area, which means the market is in harmony. It is moving together, and we have fear and greed now coming right back here to neutral, which means that the market could either move one way or the other. So if we survive the stock market crash of 2023, which was only about 5%, we want to make sure we understand that only 15% of the time that is enough. 15% of the time we do a 5% drawdown, and then we go back up. After that, 85% of the time it takes more than that. So every time the S&P has gone up by more than 20%, it has always had a drawdown. It's just a matter of how much. And if the QQQ chart now looks very similar to our SPY one, where right here we were talking about how a 5% dip, then a dead cat bounce or an inside bar going into last week. What happened? The direction of the break, which happened yesterday, is likely the short-term trend, which is why we're seeing continuation. So I'm making a bit of a joke if that's not clear as to whether the stock market crash is over. But let's go through a little bit of evidence here. We have our channel. And as of right now, we're actually closing baback above the 50 EDMA for 2 consecutive daily candle closes, which for me is pretty bullish. It means the trend could be changing once again. The seasonality chart got us all the way to here. And if it's correct, we should kind of hover around and then move to new highs going into September, which would imply we're going to hold this downtrend here. The one caveat that I mentioned on yesterday's video is that we have 2 daily candle closes over the channel, whereas before we had 2 daily candle closes below, before we ultimately had some kind of trend change. On that trend change, there was a gap down that led to the reversal. So up here, I'd be looking for a gap up if we were going to mean revert or, again, gap up and sell off. The opposite of what we did here, gap down and pump up. So at a very high level, that's what we're looking for today. And as we go forward, we're right back to fear and greed, at neutral here or around 50%. And as we move forward, let's just try to keep in mind what the market is telling us because, oh my goodness, could Jim Cramer be at it again? So I'm starting to feel myself getting a little bit bullish, but I'm looking at this right here. Powell is winning in so many ways, from homes to jobs to blah, blah, blah. That's one of the reasons this market can easily go higher. So I'm not sure if this is a trap or not, because if we look here to core CPI coming in at 8:30 a.m. tomorrow, and then we also have the non-farm payroll number coming out at 8:30 on Friday, I'm starting to wonder whether or not we're going to get a karate chop and we're going to start going down, or the bear market is going to repeat. So as a quick update to that, if we look here to SPX, this is where I provided this analysis to our group. If you want to see all these things in real time, the trade with me, Justin from YouTube, go to our website for a 14-day free trial. If you want to see all these notes as they're coming through and exactly how I position to trade and take the most advantage of this. But anyways, as we're looking here, we note that there's a whole bunch of blue circles. Those blue circles correspond to when we have a dead cat bounce after a cut and ultimately form a higher high, and then we form a lower low. That happened in May of 2022. It happened every single time I have circled here. And the reason why this is important is because if we now go close, I just want to show you that there is, other than this one here, there's a bearish engulfing candle. So higher high, lower low, close near the low. What does that mean? At one point during the week, the bulls looked right. The bulls were winning. We made a higher high. But by the close of the session, we're below. It washed out. We went for a dead cat bounce, and then we went to a lower low. It wasn't a reversal. It tried, but it failed. What about this next one here? Okay, higher high, lower low, close below the low. That's a bearish engulfing weekly candle, which again meant that at a certain period during the week, the bulls looked right. They had the higher high, but they failed to hold it. So with this key data and Jim Cramer saying that's one of the many reasons we can go higher, Powell is winning in so many ways, I'm really wondering if that karate chop's going to come here. If you're enjoying the show so far, I'm going to ask you for a huge favor. If you could please just consider smashing a thumbs up and subscribing to the channel, that would be greatly, greatly appreciated. And thank you very much ahead of time. I appreciate all of your support. All right, so we're trying to tell a story. I think it's pretty obvious now. Every previous time we've had that bearish engulfing. So bearish engulfing here, bearish engulfing here. And now it's different this time. But the reason why I'm still wondering is that we have the 3 down weeks. So 3 down weeks, dead cat bounce. What do we have here? 3 down weeks, one green candle, bearish engulfing candle. Okay, so far the 3 down candles match. The up week matches. 3 down weeks, 1 green week. What do we have over here? 3 down weeks, 1 up week. Okay, that also matches. And then we have the bearish engulfing. So in this pattern here, and also in this pattern here, and not in this pattern here, but it pretty much plays out too. It's not quite there. What do we know? Well, we got the 3 down weeks, 1 dead cat bounce, we got the higher high, and then we close at the low. Okay, so for us, that would mean that we're going to be fading from here. Going into Friday is different than going into the monthly candle close. So what we're going to look at now is just get through the rest of the news. Then we're going to look at some charts. So please just bear with me. I think you're going to enjoy it. But the most important part here is just that the market is providing symmetry. So when the market is providing symmetry or retracing mathematically back to the same area, the 78% mathematical number, it's really significant to me. It means the market is moving in harmony. I don't know about Jim Cramer, right? Yeah, take it with a grain of salt. Like, even a broken clock is wrong twice a day. So maybe this is a trap from him. I don't know. But with this data coming out tomorrow, I don't know what the print's going to be. I'd love to know. The reaction could be big, could be small. If we're going to get that bearish engulfing by the end of the week, this could be it. It could be Thursday. It could also be the unemployment rate and non-farm payroll coming in on Friday. I'm not sure. It looks pretty bullish, but everything looks bullish until it doesn't. So I don't want to be caught with my pants down. And Jim Cramer's like, give me the karate chop to the balls. There was some other bullish news that came out today. It got faded fast. HHS recommends removing a certain substance from the schedule and makes that recommendation. And then Apple also testing 3D printers to make devices a major manufacturing shift. So let's look at 2 charts to see what that actually did today. Let's look at MSOs. Well, the big part of its move, it's up by 21%. There's a massive upper wick, volumes coming in. But when we zoom out, this chart's it's more than the psychology chart. That's the rector, and then sphincter. That's what it looks like. It's pointing all the way down. So we got MSOS, but just not looking good. And then for a name like DDD, a 3D printing company on the news from Apple, massive volume today. But if we zoom in, it largely got faded. So in this market, some news is getting faded pretty fast. Some is holding up, like Coinbase yesterday. It's just interesting to watch the sentiment. So Coinbase had a pretty nice move yesterday. I'll go to full candle so we can see it. Green is good, red is bad if you're a bull. So massive move and then digesting the move. Apple moved higher today, and this seems like a pretty big deal to me. Why? Certain country, let's go to the different time frames. So in the 1 day, Apple's up almost 2. And we talked about Apple yesterday, how let's go to Apple now. We were looking here at, let me actually just go back and remove I don't like those full candles. I like them hollow. Anyways, Apple. Looking here to Apple, we were looking at this curl here in our group too, right? We were looking for an algo alert. It didn't quite go through, but Apple's up by 5% on the week. That's a pretty big move for the biggest stock. So what is it doing? Well, it's back above those 2022 and 2021 all-time highs. So we look at this chart here on an annual, which means each candle represents a full year of trading. And by getting back above the 2021 high and 2022 high, getting back above 183, we're back in blue sky territory. There's no upper resistance, notably if we make it over $200. This is notable because NVIDIA is already there, already in that new all-time high group. And then Microsoft is not that far off. It's still got a rally, but it's closer than not. That could drag other names like Google, like Amazon, back up to that all-time high club too, where they got to make a move to get higher. But there's definitely some opportunity here. Same thing with Tesla and others. We'll just move forward. So why would this matter? Well, I think this matters because in a major manufacturing shift into India, away from a certain country. Yesterday, we talked about 2 countries that are going to meet. Well, Apple's like the most important company in the world. So they're starting off with small devices. On September 12th, they're going to be talking about the Apple Watch 5. And they're also going to be talking about, I think it was the iPhone 15. I can't remember. But why would this matter? Well, I think it would matter because we can manufacture stuff. So take the resources up here in Canada, make it designed in Cupertino in California, and then 3D printed in Mexico. That's one of the reasons why I like 3D printing stocks, is because I think that if we can avoid taking things in our country, putting it on a boat, shipping it to another country, and then buying it back as a finished good, why not just take the stuff from here, send it down to Mexico, 3D print it, cheaper labor, more geopolitically stable, we buy it back, nice closed loop. Screw you, starting countries. You know which one. One starts with R, one starts with C. We don't like either of them. Anyways, as we zoom out here to the weekly, monthly chart, what do we know? This green is good. There is breadth, there is depth. So what this tells me is that leaders are leading, and now we need to see followers follow. If we go to no group, we note that the big blocks are largely pretty nicely green. Apple 5, Nvidia 7, Microsoft 1.5, Amazon treading water, but big move recently, and then Tesla up 12. So I want to see these other names participate a little bit more, but this looks pretty good. Now let's go to 1 month. Okay, well, yeah, the Dr. Red, right? Our old friend, Mr. Red, is back. He's not yet flexing that big, but it's pretty notable. So we want to see this thing at least go sideways to digest the recent moves. And what this really comes down to is what we're going to talk about a little bit more tomorrow. So make sure you subscribe if you want to see those updates, because we're going to talk about whether or not would a pullback be so bad. And we talked about how maybe we survived the stock market crash of 2023. Well, this was what we're looking for. It's a pretty simple recipe. And as of right now, let's just pop over here to that chart. Let me just make sure we got the right one. Let's go to SPY. This is the 1 week chart. Oops, 1 week. Tomorrow we close out the 1 month candle. So we're going to be closing out this one here. We're just going to focus on the one box, which is number 4. As we've been sharing the story, consolidation is happening. And now we're looking for that new high, which is the thesis that it could be 2007 and not 2008. Being early is just like being wrong. So we don't want to be early. What's the move here? Well, we talked about it. We talked about the move off the 50. We're going to talk about the yellow box and the failed breakdown. So here we're just looking at the red candle gets back above the low from the previous candle. Same thing happened here. So if we're going to get that power slam on the weekly chart, if it happens, or the bearish engulfing, we still have a safety of margin here that we could go down to 437 on SPY and still have a monthly failed breakdown. Right now, it looks a lot more like a hammer, whereas over here, it looks a little bit more like a spinning top, just because the real body's bigger. Here we have a pretty nice hammer. It's going to have to hold into tomorrow's close, which is why that PCE number will be important. But if it does, consolidation or the inside bar leading into the next candle, which would be September. People talk about September being seasonally weak. Cool. Faded a bit. Just make sure the low holds. Where? At 433. If 433 holds and we also make a higher high, that's how we can make higher highs, new all-time highs like we did over here, maybe into 2024. And then we have the recession, kind of like what happened here. What do? Crash land back down on support. That way both teams can have their day. Bears can win. Bulls can win too. And of course, this week, retail thinks we're going to go down, but not by a huge margin. So that could just mean that maybe they're wrong, or they're going to get enough pain right now that they're going to capitulate, fold into Wednesday, and then they're going to completely regret it going into the later part of the week. So let's wrap up by looking at a few key charts now. So we're going to go here to our list, which is below 50 DMA. And we'll give an update to this tomorrow, but a lot of charts are actually closing above. All we're looking for is one thing. We're looking to see whether or not the candle is closing above the blue line. So for SPY, 2 daily candle closes over that average. And for me, 2 daily candle closes signals the potential for a trend change. Just looking really recently, 2 daily candle closes below the 50 meant that we had a period where we went sideways to down. Now, if we're going to go sideways to up, that's what I'm looking for. I'm looking for that trend change. So just make sure we note that as we're going through the list. QQQ, 2 days above. QQQ is leading. That looks pretty good to me. Looking at SMH, 2 days above. All of them. Chips leading tech leading SPY. That is bullish. Then we look at NVIDIA. New record closing high. Not an all-time high for intraday, but record closing high. Looking at Apple, 1 day above. I want to see 2. I want to see Tesla with 2. So Apple is over. Tesla is over for 2. Technically, it has 2. It's not by a lot. It's by literally a couple of cents, but it stopped going down. Maybe time go up. That looks really good if it can hold. Looking at FXI, 1 over. No cigar on the second day, but it's close. Looking at Microsoft, nope, nothing burger today. Didn't do anything. Want to see it over. Need to see it get over that 50 DMA. Has to get there. ARC, just a sentiment gauge. Looks like it bounced off the 200 DMA. Not quite sure what it wants to do. If it's going to form like an IHS, it's looking pretty sloppy here. I don't know. It just looks like a dead cat bounce, a higher low, and then trying to stage that test to the 50. Just need some volume or time. If there's not going to be volume that comes in, we're going to need time to go sideways and grind there. We need volume to go in. Moving forward to the DAX, it's testing it. I don't know if it's going to be a test and a reject back down to the 200 or a test, digest, and then consolidate to go higher, like the seasonality chart says. Emerging markets just stuck in those 2 averages again, 50, 200. We're not sure. Push-pull happening. Eventually, we'll get a break one way or the other. BK is pretty close to, looks just like the DAX. US is going to lead and then drag these guys higher, or they're going to drag the market lower, meaning the American market, one or the other. ETH, inside bar, BTC, inside bar, digesting the 200 DMA. So there you go. There's our weekend deep dive. If you want to know more about why it might be 2007 and not 2008, there's now a video queued up here on the left-hand side. If not, thank you so much for tuning in. I look forward to seeing you tomorrow. Thank you again.